How are we getting on, people? I hope all is well. Back today with another Sunday Sessions video. What I'm going to do is run through my analysis for the coming week, let you all in on what I'm looking to trade this coming week and how I'm looking to tackle the markets. Then I'm going to pass you over to James. James is going to do the same. He is going to run through his markets, his pairs, and give you his outlook on this coming week. If you do enjoy the video, don't forget to leave it a thumbs up. All the support that you guys provide is very much appreciated. And if you have any feedback or any questions, just leave them in the comments and we'll get back to you as soon as possible. Okay, so jumping straight into things. First pair we are looking at today is the Great British Pound to the US dollar. Looking here on the 1 minute time frame, we can see how we had price penetrate and tap into a point of interest of ours. We since placed a sell position. This sell position ran very well, did very well for us. If we just swipe across, we can see the profits that could have been attained from this open position. I personally took partials throughout and actually closed my position and then re-entered round here, where again I took partials throughout and then we had a take profit achieved later on in that week. Now moving forward, how am I looking to tackle this market? What am I looking to see? Well, we have just seen a big amount of volume being put into the market, driving price up. And I think this was basically just to clear any remaining liquidity, any inefficiency that was left over from the initial penetration of this zone. So now what I believe is going to happen is we are going to see this bearishness that we predicted, and we can look to ride this down to our higher time frame swing low. So with that being said, come Monday, I will be looking for some kind of pullback, potentially around this area here where we can look to get into those sell positions with a refined entry. I'll have my stop loss above the swing high and then my take profit down, as I said, at the higher time frame swing low. So just to summarize, look for those sell positions on Great British Pound USD. I think it is going to be a selling market. Just have a look for those refined entries and get in where you can. Now moving over to the AUDUSD market. This is a pair that we heavily traded last week as well. We did very well on. We placed a sell position here, which we capitalized on. Did very well. We've since seen price tap into my higher time frame point of interest again. What we are seeing here looks to be a distribution. We obviously want to see these lows get broken in order for us to have the confirmation to enter into this market. But everything coincides and looks well as of now. I did in fact place a position here, which is still running at the moment. Obviously we're in a slight drawdown, but I have the protection here with my stop loss above this structural high, hoping to see price break these lows and start generating us with that bearish structure. Again, look for those sell positions. We are seeing the US dollar increase in value as time goes on, so we want to obviously be looking to sell into these markets where the US dollar is a quote currency. In terms of where I would look to enter, well, I'd want to see a break in this low here. So for price to essentially come down, break this low, provide us with a lower high, and this is where we can look to get involved, and then we can ride this down to our swing lows, taking partials throughout, and then obviously applying extra safety precautions and safety measures even when we need to. But again, just to summarize, I am looking to be a seller in this market, so look for those sell positions, ensure that you have the right confluence and confirmation to enter, and then get involved. Moving over to the EURUSD, again, we are wanting to see bearishness being introduced into this market. I do have a higher time frame point of interest, so I am wanting to see some temporary bullishness taking us into this market before delivering us with a confirmation to actually sell longer term. We've seen this inefficiency, this last sell to buy candle be tapped into and penetrated. I'm now expecting price to go forth and set that bullishness. So come Monday, assuming we have the confirmation, we can actually look to be buyers before longer term sells. So we could try and get in somewhere around here with our stop loss below the structural low that gets produced. I'm expecting price to come up, set a higher low, go on to set a higher high, and then obviously we can get in on that pullback and we can ride this all the way through to our higher time frame point of interest, where we can then look to get involved in those longer term short positions. Again, we will have our stop loss set above the structural highs that are created, and then our take profit will be set at the higher time frame swing lows somewhere around here. So come Monday, look for those temporary buy positions into my point of interest. I'll give you the coordinates now. So we're looking at anywhere between 1.0427 and 1.0449 for price to actually, drive into that zone and then provide us with the confluence of a reversal. Now, finally, taking a look at the XAU USD pair. Again, looking to be sellers in this market. Our quote currency is the US dollar, so we can expect that this market is going to depreciate. We are going to see bearishness throughout. As we know, when the value of the US dollar increases, the gold market usually depreciates. So we have actually seen a penetration of this zone, and we have since seen price look to come back up to test this zone again. Probably do a liquidity sweep before taking that move lower. So if you are looking to get involved in the XAU USD market, look for those sell positions. I would have this area here as your final take profit target, being the swing low. We know that this would be a reasonable place to set a take profit position. And then obviously you would want your stop loss set above the structural highs that get created or above this zone that we have set out here. Me, realistically, I would want to get a refined entry, so I'll be moving down time frames and I'll be looking very close at the market for those fractal breaks of structure. As soon as that's been presented to myself, I'll have my stop loss set just above that, and then obviously my take profit set all the way down at this swing point. Now, this trade and this market could offer us with some brilliant returns. We are looking at 1 to 24 RR, assuming we can get that refined entry. All we need is that confirmation, that break of structure, that confluence that, yep, the market has gone from bullish to bearish and the bears are taking over, driving this pair down. Looking here at previous data, it looks as though everything else has been cleared. We've seen all this inefficiency get cleared by this move here, all of this inefficiency get cleared. I don't see anything that's been left unmitigated other than the inefficiency that was gathered here, and then obviously the last buy to sells, which we have now seen price tap into. So I think this could be a brilliant opportunity and a brilliant trade to get placed either Sunday night or Monday morning. So keep your eyes out, keep your wits about you, and look to place those sell positions moving forward. Now that's my analysis. That's what I'm looking at this current week. As you know, I am more often than not a bear anyway in the market. I always look for sell positions. It's just something I've naturally done and I've done throughout my trading career. But the markets do look very much bearish this week anyways, and this is just down to the markets that I like to trade. What I'm going to do is pass you over to James. He's going to run over some of the same pairs. He's also analysed EURUSD and AUDUSD. So you'll get his bias and his insight into how he's looking to trade that market. And then I think he's got another pair as well that we've not actually traded or analysed ourselves here today. Again, I hope you enjoyed the video. And if you have, be sure to leave that feedback, those thumbs ups and those likes. All the support you guys provide is very much appreciated. And I'll pass you guys over to James now.
Hey everybody, hope we're all doing well. James here from LAGFX, and today I'm going to be bringing you my section of the Sunday sessions where pretty much I'm going to run through a couple of markets to give you my bias, or pretty much update my bias for you regular viewers from what's happened in the last week, so you can see how that has played along with the bias I gave you in the last Sunday session video, but then also update you on what I believe will happen in the coming week. Now, this can be very useful to you if you are also someone who analyzes the Forex markets, takes trades, because you can see what our biases dictate into us, what our strategy tells us, and then so take some of that information into your own bias, into your own trading, and into your own analysis. So sit back, relax, and I hope you enjoy the analysis that we have provided so far from Luke and the analysis I will about to provide. So, starting off here on Euro to US dollar. This is pretty much just the main market I trade. Everybody pretty much knows this by now. I was quite hesitant to take trades. I was held back quite a lot from analysing the market as much or placing as many trades as I would usually because of this range that we were stuck in for a very, very long time. However, since the last video, we have actually broken out of that range to the upside, which I believe was powered by the CPI, so an inflation-related fundamental from the United States, which managed to give us some upside volatility, so introduce enough demand to break us out of that range and hopefully now give us that bullish run we've been waiting for. So at the moment, I'm hoping to see price react to a demand zone here. We see that we've had this impulsive wave out of the range. We've then come to create a lower high, come to break that, so a lower low. So obviously we've been trading bearish. I'm hoping this acts simply as a correctional wave with the purpose of bringing us to this unmitigated demand zone. I'm hoping that we will see price tap in here, introduce enough demand into the market through the mitigation of this order, where we'll then see a reversal, break of the protected high, find entry confirmation, and look to ride price up into this supply zone that we have identified from the higher time frames, where we can then find sell entries to potentially continue trading the higher time frame bearishness. So that is the bias as of right there. Obviously, this could now potentially be viewed as a reaccumulation in the market, and if we were to view that, it could make sense with the idea that we've had liquidity built in this region. The sign of strength comes to clear all of that liquidity whilst also giving us signs the price is ready to move higher. We see that we've also cleared a lot of downside liquidity with this spring. We have the test of the spring. We start breaking structure to the upside, trade back down, hold and protect that low before making the next move higher. So if we look at that structurally and try to really depict what's going on now that we've broken out of the range, it does make sense. It's unfortunate because this major test of the area of the spring never came to tap us into a region in the market that was unmitigated. So we couldn't find any entry from this, which is what I was really hoping to find for a nice buyer entry. However, we see that there were some great opportunities from the demand zone tap over here, and then the test of this straight after. So if we were watching this for a long time, and we were holding some buy positions for a long time on top of that, given that we didn't trail our stop loss, we would actually be running in a brilliant plus right now. So just an example, yes, we would have been charged a fair bit for holding this trade as long as we did. However, you see at its peak, we ended up running 267 plus pips, maybe 270-ish, which could have delivered us with a 16 RR return, or if we refine that entry more, we could have that RR much higher. So there were some brilliant opportunities within this range. The good thing about a ranged market is that we have a lot of zone hits. Because we're coming back and forth, there's no real direction, but we are still reacting to zones. You see that all of these zones identified on here, not all were reacted to, but the majority of the ones that I identified did get a reaction from them. We see especially some of these demand zone taps we had early on, where given that we were able to get an entry from these, we could be holding them now and getting a nice return. Anyway, point I was making, when we do have range of markets, if we can get involved in those moves, when we eventually do break out of that range and the volatility comes, we have gotten involved at the best possible position. So regardless, recap the bias. Price tapped into this demand zone. I want to see it reverse, take a move higher into that supply zone, where we may then see it reverse and take a move lower. On first glimpse, I don't believe there's anything unmitigated in this region. I believe all of this is very efficient structure, and therefore really the only remaining zone that I would want to see get tapped, mitigated from, is this, potentially a small candle down here. However, I would much prefer the zone that I have identified be the one to hold, as that is the higher time frame demand zone that we would identify. This is just a hidden demand zone on the lower time frames. Now if we go to US dollar yen, we see that we've been following this bearish for a while. We've been breaking structure to the downside. This is the most recent impulsive wave. Now, yes, there was also a supply zone here, which is now appearing price has reacted to. The reason I didn't like the idea of that zone is because I always prefer to see price come up to mitigate the higher of the unmitigated regions in an impulsive wave, so that it's not leaving many unmitigated positions remaining as it starts to trade lower. Reasoning being, it's removing any counteracting demand from the market, which may hold up the longer term move. Anyway, back to the point, we have reversed potentially in this buy to sell zone, which By all means, it was correct to identify this region. The only reason why I didn't identify that region is because of the reasons I just gave about wanting the highest zone to get mitigated. So anyway, we've had the reversal there, fractal change of character, a retest back up into a nice supply zone there, then come down to break the higher time frame protected swing of this bullishness, which is longer term confirmation of the move lower. You see that we have this buy to sell remaining in the market. So my expectation now is that we take this as the impulsive wave, price comes back up, trades into here, I will get an alert, we will then see price reverse, make the move lower, all the way down to this current target, which is approximately 426 pips away. So given we're able to find an entry in that region, we have a lot of leeway to get involved in sell positions. So that alert is set at 134.7, and that is where I'll be looking to take sell positions from. Now moving on to the Australian dollar to US dollar, we see that as of last week, we're looking around this region, maybe even before last week, sorry. I think it was this zone I might have updated in the last video, somewhere around that region anyway. We had a false reaction to this zone, but then after we made this move higher and through, we had a change of character, came back up, reacted to a supply zone, which I thought could have been confirmation enough of the higher time for reversal. However, there was never enough volume introduced after this tap to give me enough of a sign that price is wanting to reverse longer term. So we've obviously had this high move up. What that high move up has done is tapped us into the next supply zone in this region. So looking inside of here, we've had the tap, a slight liquidation, which is fine, it's just a wick. We see that from there we had the failure to create a higher high. We then had the liquidation of the low. I identified this supply zone, which we've seen price react to potentially, and we might see price begin to make moves lower. However, I will not be getting involved in any of these entries until the higher time frame protected swing is broken, because I always like to have that higher time frame confluence and confirmation through the higher time frame change of character. However, what I will be doing, given that an entry is delivered anywhere in this region, is because we are technically still longer term bullish, looking inside of here, I will be partialing when we approach these demand zones on the off chance that demand is still in control longer term, and therefore I will be taking off profits before price taps into these, where it may reverse, find enough demand from the mitigation of these zones to take price higher. Because yes, our bias was for price to tap one of these in reverse. However, there is still a zone higher it may still want to mitigate. Therefore, it would not be wrong for price to react to one of these zones and make its move higher. So we're definitely making the most out of partials in this position, making sure that we safeguard our positions and implement the correct risk management and safety measures needed. So quite nice here on this market, we have just tapped into the zone, waiting to see reversals. So anyone else who had this zone identified, best of luck in the coming week finding entries into that. We will hope that price has enough supply in the market to deliver that. Just a recap on US dollar yen, same thing here, hoping to see price trade up, reverse from this zone, take those moves lower. That's quite an obvious zone. It's the only buy to sell region in this entire move down, so therefore to me is the one region that needs mitigating. And then we have Euro US dollar, again as I stated, tapping into here. I want to see the reversal and price going higher. That's going to conclude my section of the Sunday sessions. I hope you're able to take a bit away from these markets that I've analysed for you here. I hope you've enjoyed the analysis from Luke as well. Make sure you're involved in our Learning Lounge group chat to get updates on this analysis throughout the week. If you want more in-depth insights and insights into how we actually tackle this on a daily basis. So in our VIP chats, myself and Luke will update these markets on a daily basis, as well as any entry opportunities we see, any entry opportunities we are looking to get involved from. If you would like this extra bit of information, by all means check out the website, look into more information on these. If not, absolutely fine. Make sure you're using the information correctly from the YouTube to implement into your own trading. So with that being said, thank you all for watching, and I hope you all have a great trading week.